Hi everybody, it's John Seville and this is your executive summary for the 1st of September. And it has been a tried and true performance of the technicals working the way that technicals should, which is on point and profitably. So let's take a look at how they've been doing. Of course, we looked at the S&P, we talked about it all day today. Markets dropped precipitously. Rounding out through that top, you can see the downward trend line here coming through, rallied right into that. The declining volume, the shortening of the candles, hit the trend line and straight down. So the open range is now set. You can see I've got the lines drawn on here around 1970. We've got the low here set around 1905. So we want this the market to continue to close below 1970 for open range to stay true. A break above that could possibly indicate a rally upwards. I can't see a lot of positive things going for the market now that would encourage that, but obviously we'll wait and see. But obviously we're almost entirely positioned into puts to the short side, which did very well today, and I hope that everyone out there has been profiting big time. Now, to take a look at some of the things in focus going forward. Obviously we got the jobs report at the end of the week, but I mean the big focus is on the ever-present, much larger threats of the market, being the overseas markets, China, and the threats we've been talking about for the last few weeks. That's not going to change by Friday, so we do feel that there is still a major undercurrent that's going to pull this market lower, but at the same time we also want to look at taking profits at some of those key support points. So going into tomorrow's market, we want to keep an eye on as we start to hit some of those key support points to be cautious. Something that we may want to look at, for example, Ralph Lauren, something we've been talking about for a while in terms of a very great short up around the 130 mark, is now reaching that type of strong support at 105. I mentioned to be cautious of that. You can see that how, if we go back a little while, how strongly it rallied back here, going from basically 104 all the way up to 141. Those types of rallies are fueled by high frequency trading, so we don't want those to kick in and burn us. But what it also means is that if we break down below those levels, we can get some exciting possible gains. So beware of that level, but if we break it, the shorts could be on, and we'll certainly be looking at put contracts on that. Another one that I mentioned tonight in the trading room was STX. Now I have quite a few long-term put positions I'm looking to add to tomorrow, but you have to be a Big One member to get access to those. So if you're not, you may want to let us know, because that's definitely worth getting into. But STX, Seagate Technologies, I'm going to just take off these Fibonacci's here for a second and reduce the madness. Let's go back a little bit and show you where this comes from. We got a very long-term macro potential kind of head and shoulders feel to this, and despite the macro kind of oscillation here that we've broken down from, you can see that it rallied straight into that long-term trend. It's failed, and as we start to fail beneath this resistance level, you can see that the Twigs money flow is actually divergent over almost equal highs, and you can still pick up like $45 January puts for $2.40 roughly on this, and that could be something that could easily drop down if you look at where that would dictate down to this kind of support level here at 36, 37. So plenty of time and plenty of potential profit on a play like that. Excuse me. Now I'm going to give you two other really kind of a bit contrarian plays, because I can't share the big ones. Those are kind of secrets for those subscribed to that course. But here's a couple of trading opportunities that you may be interested in. Firstly, INCY. Now this is coming out of a sharp double top, and you can see that it definitely plunged down to the 200, got support around 92 and rallied up, but over the two peaks you can see divergent money flow. We've rallied up, we've got a bearish close. This could be an interesting short if it breaks down lower or has a rally up to kind of around that 117.30 area. Either way, we don't want it to make a new high, because that would above today's high range, because that would indicate a reversal candle off the moving average. Don't want to see that. So if we find ourselves rallying back into the 120 zone, I'd prefer to enter it on the way back down versus playing into that reversal move. So we want to think ahead and make sure that we're trading the chart we want to see, not the price we want to short at. So key thing to remember. So anyway, we want to see it make a lower high or break the low. Either way, possible entry point, and we could look at reaching back to these lows around 102. Now this will create a 1, 2, 3, 4th touch, and based on the rules of a double top, we can measure the distance between the top and the neckline, duplicate that beneath, and we could be looking for a drop down to 86. So I mean, for those of you who like to play options, there's a whole lot of room down there to make money off. If it does drop that low, of course, that's a significant drop if it gets down to 86, but also as a potential stock play. So there's INCY. Moving on, we have a other trade that was actually brought to our attention from one of our students as an option potential. Now, who says that this is the market to go long? Not my financial advisor, which is me, by the way. No, we're not going to be going long, but sometimes you find opportunities that are worth taking a pot shot. VVUS is something we've been following for a while and something that's quite interesting because it just hasn't gone anywhere but sideways or up throughout all this turbulence. You can see the money flows picking up. We've been taking pieces and chunks and pot shots at this throughout the year without profit, but this time it really kind of looks interesting. It's at, as far as I can see, an all-time low. Bam! There we go. Now, of course, this can go broke. What's cheaper than $1? Zero. But what could be interesting as a purely speculative trade is that this does have some insider buying. Both BlackRock and another institution bought into this stock just recently. So here you go. We're going to go and check that out. VVUS. Let's have a look at the institutions. We've got Van Herk Investments, 5.3% owner. BlackRock, 10.8% owner. Both investing into this only recently, as recent as last week, despite the turbulence in the market. Strange, huh? Considering that the biotech sector has been getting a bit of a pounding. So there you go. You can see no real kind of insider buying going on. A lot of biotech stocks getting crushed under their own weight. Now, pharmaceuticals, maybe not so much, but biotech's been difficult. This one seems to be making a recovery story, and I think that it could be potentially exciting. Now, if you go out and have a look at some 2017 January calls, there are $1 calls that I saw selling for as little as 45 cents in that region. So, I mean, that gives you 16 months for this thing to possibly get up to, you know, $2, $3, that kind of thing. Now that seems like a long way from here, but again, remember it's 16 months, and have a look at where the stock came from. I mean, we're dealing with $30 once upon a time, and of course we can go back further, and we can see that this story has had a few big hikes like this. So these are the types of speculative companies that can get bought out. They also can go bankrupt. But you know, sinking $1,000 in something like this for myself and just letting it go. And hey, if it goes to $10 and I bought it at 40 cents, and those go up to a significant increase, then you know, that's the kind of thing I'm happy just to sit and forget about. If I lose it, I lose it. But you know, if I can make 5,000% on it, then happy Christmas to me in 2018. So anyway, there's a speculative kind of roll the dice, much better than Vegas in my opinion. ACET is the last but not least, and you can see this one is just breaking down. I found this as an earnings play. Now the problem is that there's hardly any volume, but just wanted to illustrate the type of things we're going to be looking for. I wouldn't necessarily have picked this as a trade just because of the volume, but these are the kind of things we want to be on the look for. Ones that are just starting to break now. So there's your kind of head and shoulders pattern. You can see that right there. It's pretty clear. Symmetrical, straight up, straight down, symmetrical, broke, hug resistance. There would have been your short yesterday, probably from a stock side of things. So trading about $250,000 a day, roughly. But you know, we'll see how earnings goes. Again, I won't be trading this one. It's more of a kind of an educational thing. That's where we want to start looking for trades, is the stocks that are just starting to break down underneath those resistance levels. I won't give away too many secrets. You'll have to tune into Trading Room to get those. So we'll see you all soon, and happy trading. Of course, if you want to subscribe to the trading room, make sure you do by going to acornwealthcorp.com/fly. And for those of you who are also joining us tomorrow, we have the stock scanning workshop where we're going to talk about all of these things that we've found, and you can go to acornwealthcorp.com/event. acornwealthcorp.com/event for that stock scanning webinar that we are rerunning as an encore performance from last week for those of you who didn't get into it. So we'll see you all there, and we'll see you in Trading Room on Thursday. Take care. Good night.